Let's take a look at inflation figures for Nigeria. We're showing a 12-month low. Headline inflation 15.4% from 15.9 in October. Food year-on-year 17.21%, 18.34 in October. Core inflation that did show an increase. Bucked the trend there from headline and food inflation. Let's take a look at the month-on-month figures, or we've got a bit of a different story here. Yeah, month-on-month we're seeing a rise. Headline inflation 1.08% again in Nigeria from 0.98 in October. Month-on-month for food inflation, also another increase, 1.07%. Core inflation, 1.26% from 8.8% in October. Again, this divergence here. And joining us to break down this divergence, talk about a whole lot more, is macroeconomist, fixed income strategist from Chapel Hill, Michael Ogunrenmi. Michael, good morning. Thanks again for joining us. Good to have you. So, as far as the year-on-year figures that we're seeing there, is this the deceleration that we're seeing, is it encouraging in your view? I think it's what, 8th month in a row that we've had this? Yeah. Yes. So let's start with that.
So I think the best way to analyze this would be to look at how has this impacted economic agents. And so for me, I'd say you look at the households, you look at policymakers, and then you look at investors. From the perspective of households, I don't think households are really feeling any impact as far as this deceleration is concerned, because on a month-on-month basis, you've always had inflation printed positive. You're right, and if you check the performance of the month-on-month inflation, headline inflation for November, you notice it had a stronger outturn. So yes. From a household perspective, I don't think so.
Okay.
From an investor's perspective, real return is still negative. Right. You check the 360, the 1-year TBO, currently trading at around 5%. Check the 10-year bond, trading around 12%. And then you compare that with 15.4%. You have a negative real yield. I think the only set of people that will be benefiting from this will be policymakers. They can say that their policies, has been, quite supportive.
Thank you. How do we explain the divergence between the year-on-year figures decelerating and month-on-month? Is month-on-month more accurate, or how do you see it?
It's an interesting tale.
Yeah.
To be frankly, it's an interesting tale.
The numbers right there. Yeah. So how do we explain this?
Well, so I think the narrative to it would be to say that as far as current realities is concerned, month-on-month gives a better picture. So the month-on-month inflation rate tells you where exactly are we currently. The year-on-year inflation rate is still reflecting, the shocks we had, the shocks to prices, shocks to production that we had in 2020, right? And so as far as, the divergence is concerned, it's definitely going to be there, because you have this evolution in terms of demand and supply post the lockdown. So that's what is explaining, that divergence.
Thanks. Food inflation also decelerating, but I think you've already mentioned households. They're not, and the average Nigerian on the streets. So again, it was 17.2 from, I think, 18.3 or so year on year. But again, we're not, as far as impact, if you had to ask the average Nigerian, do you feel
absolutely.
Whether they're not seeing it?
Absolutely.
Wow. It's December, right? No, actually, core. Let me ask you about core inflation. All items less farm produce, it rose to 13.85 in November versus 13.24. Gas prices, did that play a role there as far as core inflation is concerned, as far as that increase year on year? Because that was the one increase that we saw year on year that's diverse from headline, right, and yes, food. Yeah. So yes. How are you seeing that as far as core inflation is concerned?
So I think I like to describe, based on the study of core inflation.
Yeah.
I like to describe it as obstinate.
As obstinate, eh?
Yes, absolutely.
Okay.
Obstinate, right? Because you see that stickiness, that sluggishness in terms of trailing how headline inflation is performing. And I think it's important because most times when people, analyze inflation, a lot of people pay attention to headline.
Right.
But the core inflation is also very important, because it says if you take out food, every other thing left, how have they performed? Non-food items and services, how have they evolved in the last 1 month? And so if core inflation is printing higher, it tells you that the current reality on ground is speaking to higher prices overall.
Right.
Yes.
Now, we're seeing lots of people shopping there. People are going to be visiting the markets and buying food for the
Festival.
the festive season. Yeah. So, do you, if we have this conversation again in January, and we're looking at inflation figures for December, do you think that will this be maintained? Do you see an uptick for December? How do you think it's going to play out?
I see headline inflation growing, but at a slower rate. Right? So, point is, quite right, the festivals will prompt a lot of demand. You definitely get a lot of demand in the market. But I think there are two factors that would sort of, net off, or dial some of those impacts. The first will be that most manufacturers will draw down on their inventories now because of the high demand in the market. They want to sell. For most manufacturers, there really is no point keeping it the next year.
Right.
Start a new year on a new note, right? So they will draw down on inventories, push it out to the market, and then we expect to see some additional supplies. I think there is also the argument that, Nigerians residing abroad will want to send remittances down to their families.
Okay.
Some of this, dollar filter into the parallel market, we expect to see, a bit of, appreciation in that regard. Okay. And that would also, douse inflationary tension in the commodity market. So when you combine both effects, right, I think that it shouldn't we shouldn't see any form of elevated inflation rate as far as December is concerned.
Fascinating stuff. So you have to see what wins out.
Exactly.
That's why economics is such a fascinating topic. You mentioned real rates of return earlier and investors. So it's negative. How do you? I mean, what do you do? Is foreign exchange? How what is an investor to do at this point when you are confronted with this type of numbers and you're looking at what you mentioned, T-bills? I think the NGX is what, plus 5% for the year.
Yes.
So what do you do?
Well, to be honest, I'd say most investors, probably in a dilemma, right?
Yeah, it's a tough place to be.
But I can understand. I can understand what they're going through because, like I said earlier, real return is negative. But this is something most people don't know, and that is the fact that if you do a year-to-date, performance of the 10-year bond and the 1-year T-bill, you will discover that the change in the yield for those two maturities have surpassed the change we have in inflation. And let me put some numbers to it.
Okay.
For instance, the 1-year T-bill has gained, roughly about 5%, 5 percentage points, right?
Yep.
You check the bond market, it has gained about 3 percentage points thereabouts year to date.
Yep.
You look at inflation, all of the disinflation we've seen, in the last 8 months, you compare that, to the beginning of the year, it's just about 1 percentage point, decrease. Okay. So it tells you that, the changes in yields for investors, are sort of surpassed the change in the disinflation we're seeing.
Interesting.
So the narrative then becomes that on a year-to-date performance, I think investors are still better off, and I think that is why we still have that interest, both especially from domestic investors in the fixed income markets.
Ultimately, how do we bring down? And when I say bring down, I'm looking at the central bank's target of 9% or so. How do we bring that down? Okay. Is it a structural issue, or it seems so gargantuan when you talk about these things and how to moderate these things. Yeah, what's the? I'm sorry, I'm throwing all these hard questions at you, like you're a policymaker.
To be honest, right? It's like asking who will build the cat. Honestly, that's the analogy. That's a big question here. Yeah. So let me break the two questions down. Number one, how do we bring it down? I like to think that as far as inflation is concerned in Nigeria, several analysts can have different view, but I think it's a mix of everything. It's a mix of demand pull, it's a mix of cost push, it's a mix of structural inefficiencies. As far as demand pull is concerned, it's going to be very difficult for us to tame that, because how do you tell someone consume a particular
less than what you're consuming?
Exactly. So as far as the demand pull side of it is concerned, it's going to be hard. For cost push, I think FX still plays a big role, the biggest role there. Okay. If we're able to solve our FX issues and allow manufacturers to have access to more FX, it goes a long way. Yeah. For structural efficiencies, the question then comes around, on the supply side of it, how do you, improve domestic production in the country? On the demand side of it, how do you improve the quality of what you're producing so that Nigerians can, demand for more made in Nigeria goods?
Michael Ogunrenmi, this is a long story, a long discussion. Macroeconomist, Chapel Hill Denham, thank you so much for joining us. Talk about inflation.